Hello, everyone. Welcome to the session FinTech for ESG Investment, What is New for Hong Kong. I'm your moderator, Anny from Cyberport. Today, we are going to talk about ESG investment, which is a very heated topic in different industries, and also for risk, for green loans, and also for investment purposes. And in the session today, we have a very interesting group of panelists. So why don't I invite each one of them to introduce themselves and also a little bit about your company. So I will start with Douglas.
Thank you for inviting me. I'm Douglas Chow. I'm the CEO of Seleya Technologies. We're a Hong Kong-based company. Just a quick background on our company. Formerly, I was the global head of artificial intelligence at one of the largest asset managers in the world. And my team and I left this company about a year ago to focus specifically on building AI-enabled ESG capabilities. What we specifically do is we enable financial institutions to develop their own ESG capabilities in-house.
Okay, thank you, Douglas.
Yeah, hi, I'm Trevor Laight, CEO for Frankserve, which is a credit rating agency here in Hong Kong. We develop AI, ESG, and credit rating solutions for banks and FIs. We also have real-time monitoring and alert systems, so we can actually provide investors, banks, institutions, real-time information about ESG performance of capital flows. This supports ESG financing and credit ratings, etc. So that's for us.
Thank you for having me. My name is Mark Ho, representing ProMEX. ProMEX is a FinTech startup based in Cyberport, and we are also a licensed money service operator in Hong Kong. So we operate a digital marketplace for physical commodities. Buyers and sellers would interact and trade on our platform directly without any intermediaries. So orders would be input into our central order book, and we will use technology to match those orders. And these trades will be settled instantly. So that's what we do. We aim to deliver transparency, trading efficiency to allow the market users to be more market responsive. Thank you.
Thank you. So to maybe set the scene, because we know that many financial institutions or many companies, they are trying to enhance their ESG capabilities. And so what kind of opportunities do you see in the market from your sector? Or what are the market demands that you are seeing? So maybe this time I will start with Mark first.
In the commodity space, actually, it covers a lot of different industries. So I think there are a couple of issues that the industry is facing. Number one is the lack of market data or ESG data per se. Many often, a lot of, for example, if you are a distributor, very often you may not be able to get ESG data from your upstream suppliers. So even though yourself, you have your own data, in the absence of information from your upstream suppliers, you may not be able to compile a full set of data for your downstream users or customers. So that's number one. Number two is the industry is very diverse and fragmented. So the extent to which each sector has taken steps to address ESG varies. So it could be quite a challenge to coordinate standard or ESG initiatives among various sectors. So these are the key issues that faced by our industry.
And is that do you think it's a market-specific problem, or do you think it's a worldwide problem?
I think there are certain common issues, but at the same time, there are issues faced by specific sector or underlying market. For example, in the metal industry, for example, I understand it's quite difficult to command or demand a premium price for green products. So, from a financial perspective, the producer or suppliers may not have sufficient financial incentive to promote or produce green products for adoption by the market.
And Trevor?
Yeah, I think for us, we're developing ESG credit ratings and tools, for example. And as we see in today's environment, there's a huge demand for ESG financial products around the world. Investors are demanding ESG compliance. Industries are trying to transform into more renewable energy, more sustainability. And to be able to facilitate that, you need to have basic tools and reports. And so what we do, we develop scorecards, ESG ratings, etc. So that way, that can facilitate the financial industry by doing green financing, doing green bonds, for example, which is going to support the industry's transformation into new technologies, which is required in today's society. So if you look at the Paris Agreement and UN targets, for countries and companies to achieve those targets, it's going to be quite challenging. And we're providing those tools to enable us to develop financial products to enable that transformation.
Got it. And because from what you're saying, I can see that you also need a lot of data. And did you experience that kind of challenges that Mark just shared with you also?
Yeah, I think that's quite consistent. We had a POC with Cyberport. We did a review of what's available in Europe and America versus what's available in Asia. Obviously, Asia is a little bit lagging at the moment in particular, but what we see is that HKMA is doing some quite good work in terms of making reporting requirements. But we see that investors are really demanding the data, right? So if you want to be able to if you want to have access to financial products, customers will provide the data because they want to have access to those products. So for us, it's more about being investor demand driven, so people will do the reporting. Yeah.
And how about you, Douglas?
Yeah, so it seems very clear that in the industry today, there's this rapid growth in these ESG products, as Mark has mentioned. Today, this industry, there are about $13 trillion of ESG assets, and it's growing 30% each year. It's astounding numbers. And so while this is a very large revenue opportunity for banks and financial institutions, there are very credible business risks and reputational risks if the products that you're offering into the market are not truly credible and differentiated. So what does that mean by being credible? Well, credible in the sense that if you create a fund and you select a list of securities, how did you select those securities? Is it based off of numeric data? Or is it based off of third-party scores? Or is it based off of something else? And so as a result of these real business risks, what we see from our clients is that they really are demanding and requiring to develop their own ESG capabilities. But unfortunately, it's very difficult to do, right? There's the data issue that that Trevor mentioned. There are very few domain experts that can actually do these scorecards. And then lastly, how do you incorporate all this information to make sense of it from an investment and business perspective? And so this is where Seleya comes in. We really are an end-to-end solution. On the data front, we have coverage of over 400 data points on literally 10,000 companies around the world. But more importantly, what we provide are the analytics behind that so that if you're in capital markets, if you're an investor, you're able to digest and understand what do all these ESG metrics mean. But finally, because we are really an AI company, really the magic sauce of what we're trying to do is to scale up the internal human ESG insights. And so this is where the data integration comes in. This is where the AI comes in to incorporate all these human insights with the data and the AI to scale up and enhance the human-generated ESG insights.
Yeah, I think just to add on that, Doug, and that's where, for example, we're quite similar in terms of us and FV doing the credit rating scores. And what we found is that when we talked to a lot of the FIs in Hong Kong and Asia, there's a quite lack of talent internally. There's a lack of understanding about how to use the data. And so, for example, if you want to do a credit bond, credit ratings, banks have the technology, have the data. They've been doing it for 15, 20 years. But for ESG, it's quite new. There's a lack of talent there. And so they find it much more easier, much more faster to come companies like ourselves or Doug, for example, where we basically become the risk management department for those bank and FIs, we've got a credit decision engine, modules, we build the scorecards, we understand the data, we're expertise in that area, and that gives us speed and agility to be able to help FIs to be able to come up to speed much more quicker than they could on their own. Also provides a standard. That way then if we do it, we know that we're doing it for many FIs, for the industry. That means there's a common standard, because at the moment, what the issue is, when you look at all the ESG products at the moment, each different product has their own standards and methodology, so it's very difficult for investors to make a comparison between the different financial products. If we have one particular FI that does it, then we can make it more consistent and transparent.
Yeah. So Trevor, but can I ask you, so if you do the risk assessment on ESG, or other credit agencies are doing similar stuff, yes. So how do you, are you using kind of similar standards to assess, or how do you coordinate among the industry peers on that?
Yeah, that's a good question. So we're actually working on a POC with Cyberport on looking at the different risk management frameworks. So we've developed a risk management framework for Hong Kong and Greater Bay Area, which we're going to use for Asia. And it's quite important to develop one that's going to be standard for the industry, so that way then investors can look at the comparable. It's fairly consistent for what the other 3 competitors are doing in terms of the ratings, and that's important. But where the subtleties is going to be different is going to be in the data. So when you look at different markets, if you're going to build a ESG score for Hong Kong versus China versus Thailand or Vietnam, the framework pretty much is consistent, but where the actual value is going to be is through the different data components, because each country is going to be at a different stage of where it is at in terms of data availability, but also where it's in terms of technology adoption in the different markets. So that's where we're at the moment.
Right. Okay.
And I guess me as maybe as a potential customers, hearing after what you guys say, I would have a follow-up questions of, if I'm the potential user, why would I be choosing you? For example, Douglas, I know there are a lot of ESG AI companies helping people to do investment already. So how do you differentiate yourself from others? And for Trevor, there are also other international or overseas credit rating companies, right? So what's your strength? And for Mark, how do you, what sort of benefits will customer get if they partner with you in the platform? So anyone want to address that first? Yeah,
so for Seleya, the key differentiator is really our expert-centric AI. We are learning how a financial institution's internal ESG experts are making these assessments. And so what this means is that if an FI has, let's say, coverage of 500 stocks, and if they've created ESG scorecards on 500 stocks, given our data and given our AI models, we're instantly able to scale that coverage from 500 stocks to 5,000. And underlying all this is the quality of the data and the transparency of the data. As I mentioned earlier, we literally have data points, over 400 data points on about 10,000 companies, but this data is auditable. So when you use our platform, you can click on it and you can see exactly where that number came from and all the adjustments that have been made in order to get to that number. So this gives the client the confidence that the data underlying the AI models and also their internal insights, are valid.
Yeah, I think for us, we're basically an AI, FI tech-driven company. So basically, all our models and scorecards are data-driven. So we're using some alternative data as well to actually bring in to add value to the actual scorecards and benefits. We obviously do a lot of back testing, so we're making sure that our scores are robust. So it's all about the data AI analytics. But on the core is that our teams from banking, from the FI industry. So we actually understand the products, we understand the customers, we understand the industry. So we're not just data scientists coming from university doing models. It's important to have the methodology, but it's actually very important to have the industry expertise as well. So when you build in these models and scorecards, it makes sense. And when we're building products for the financial institutions, it makes the good products.
Yeah. For us, it's quite simple because we are quite unique. So it's quite difficult to find an alternative trading platform like us. in the marketplace. So we can deliver a couple of things. Number one is green trading. So we help firms to digitize the trading process. So it's all electronic, paperless, so no more emails, no more phone calls to negotiate prices or settlement terms. So everything will be settled, traded instantly. Second thing is we can help industry users to promote green products. So we can list green products where we can to help promote sustainability among the industry. So number three is we can provide transparent market data. So all the transactions, prices, everything taking place on our platform will be transparent to all the users. So in the future, I mean, with the support of financial institutions, potentially we can provide trade financing, leveraging the functionalities available on our platform. So that's what we can make available to the market.
Yeah, I think just sort of the supplement there with Mark is that we're actually expertise in the Asia Pacific region as well, so we cover the Asian markets quite comprehensively. And it's also about we've actually got obviously a credit rating agency as well, so we can actually do correlations between ESG scorecards and actually the credit scorecard, and then have, because when you look at say the valuation of Tesla, for example, it doesn't make as many cars as most of the other manufacturers, but its capital valuation is far exceeding the rest of the auto manufacturers. That's because investors are making a bet that EV cars are going to be the future and combustion engines are the past. And so if you can identify and do some modeling and do some correlations between that for other stock markets and on prices, that's going to support ESG investments. So there is some correlation between not just an ESG score for your financial products, a credit score for your financials, and then holistically look at those both data sets. And we have both data sets, so that really helps us identify those correlations as well.
Yeah, I think that last point's really important, is to be able to put things into context for the financial professionals that are now trying to learn about ESG and incorporate it into their business processes. And at the end of the day, we're all FinTech, but technology to be implemented successfully in companies is really a change management exercise. You need to really win over the hearts and the minds of the people using it. And so at Seleya, how we've tackled this, and again, because we're coming from more of an equities perspective, is we created a suite of analytics to help the users understand how does ESG performance translate, or why does it even matter to the stock? And so, we have a suite of analytics. Actually, some of them are very interesting studies, for example, that very clearly show that as you reduce carbon emissions in certain industries, those companies actually earn a higher PE multiple in the market, right? Or for example, another one which I thought was absolutely fascinating, I was talking to a client recently, and they were asking, Doug, all these companies are trying to move to use renewable energy as their primary source. Is this going to dilute their margins? And so using our data analytics, we looked at this. And so we looked at a couple of the companies who have done this. So Facebook today is 100% using renewable energy. Now what's interesting is rather than seeing the margins decline, the margins have actually risen over time and their PE multiple went up. Now, obviously you can't say that using renewable energy was causation, but this type of analysis, this type of insight helps to win over the minds and the hearts of the analysts and the financial professionals that are trying to make sense of ESG.
Right. So just one follow-up question. So because we have been discussing how to enhance the internal capabilities for the companies, for the financial institutions to achieve their ESG strategy, but how about for external stakeholders? What do you think they could have helped you to facilitate this adoption in ESG?
Yeah, so I think what's fascinating about where we are today in ESG, 5 years ago, this was a cottage industry, and no one really talked about it. Today, it's become mainstream, and I think all of us will share the same experiences. That number one, the standards have yet to be really formalized. There are so many standards. There's SASB, there's GRI, there's TCFD, and so first and foremost is the companies themselves are even struggling to figure out which standard should I follow. And so I think that's one thing which will improve over time. And I think, my understanding is that there's an organization called the ISSB, which is the equivalent of the IFRS, is that very soon there will be a standard set in terms of what is required to be reported. So I think that's number one. But number two, and I think this is where the three of us come in, is at the end of the day, we have to win over the hearts and minds of the people who have been doing their jobs for 20 years, but now they're asked to incorporate ESG. And I think it's companies like ourselves that are trying to help them make that jump to bridge the understanding between ESG and their existing business processes.
Yeah, I think similar to Douglas, I think the World Economic Forum is just announcing more standardized in terms of the reporting, so we're going to get a better standardized. They've been working with the big four accounting firms to make it more standardized because there is different standards at the moment. But ultimately, what we see is that it's really about companies investor driven. They actually now, the biggest change is now, people used to do ESG because it was nice to do and it felt like it was good for society. Now it's something that's actually good for business. Now they can see actually the value, and that's where our work in particular can measure the value of the change in what their investments are, because we can then measure the increase in the ESG score by their investments, and that actually drives down shareholder value. And so companies are really seeing that this is actually not a nice to have, it's a must to do. You just got to see, China and Hong Kong are signed up to the Paris Accord, and so they're now encouraging investment. There's HMA have actually got some investor programs that actually pay for a lot of these costs. We've got the Greater Bay Area program where they want to look at SME securitization for green financing. So there's a lot of initiatives around the group at the moment now which are actually going to encourage this across the region.
In my area, it actually covers a lot of different industries. So I guess, in my view, I think there are two things that the industry can do. Number one is to issue more industry best practices, focusing on the underlying relevant sector of that industry. So because I think that's more appropriate to be issued by the industry body, because this body would understand most this underlying industry. So I think that's the best way to give guidance to the relevant stakeholders. Number two is to have more coordination or sharing among different sectors so that each other can understand more and check their own progresses and learn from each other. I think that might help the different industries, maybe arriving at a common standard in the future.
Thank you. So I think we are running out of time. So many final words for your target audience, maybe Douglas?
Yeah, climate change, is really an existential issue for everybody. And at Seleya, we're shared by one purpose, and that's really to make a change on this. And how do we make that change? Well, I personally believe that the flow of capital impacts the cost of capital and ultimately will either starve companies that are doing harm to the climate or reward the companies who are actually helping solve the bigger problem. And at the end of the day, I think it's the financial institutions who are in the best position to create this better outcome. And so if you're in capital markets and you're issuing a green bond, or if you're an asset manager and you want to launch a new ESG ETF or an active impact fund, it's good for the world. But you need to create a product that's credible, that's backed by hard data, that's not based off of opinion and external ratings. And that's really where Seleya comes in. We're here to help the financial institutions create these credibly differentiated products.
Thank you. And Trevor?
Yeah, just here at FE, we're actually here to actually develop, ESG and credit ratings to support capital flows between, between investors and institutions, to support green financing loans. So that way, then we have an efficient marketplace, capital marketplace, to allocate the capital where we're going to get the best investment to improve the ESG and ultimately improve the environment and improve the way that we live today and into the future, which is going to be critical for us and for our children. So I think we're going to be here to actually help facilitate that capital flows between institutions. Any market that has open, transparent, and has a more efficient marketplace is going to allocate that capital to the right place, and that's why we're here to facilitate that.
Just want to highlight the importance of digitization. just digitize. And I think digitization would form a very important part of the sustainability strategy of many businesses. So we are here to help industry to digitize the trading, promote transparency to the benefit of many users. So right now we are working with certain industry users to list green products on our platform. Hopefully, if you are interested, you are most welcome to contact us. Thank you.
Thanks again, Douglas from Seleya, Trevor from FV Open Rating, and Mark from Promax. And thank you for joining us today's session.
Thank you very much.
Thank you.
Thanks, guys.
Thank you.